Let's bring in Andrew Clennell and Laura Jays, my colleagues. Andrew, first to you. This is bang on where the government, the RBA, thought it would be.
Yeah, a couple of interesting things to note here, Kieran. The government wants it here or hereabouts for a little while. Politically, by the time this term ends, they want the growth back on. But have a look at the budget. 2023-24, the forecast for annual growth was 1.5%. What is it today? 1.5%. Then in my EFO in December, they revised that to 1.75%. So by the end of next financial year, I reckon they'll get there. And what happens then? Inflation comes down, you don't quite hit a recession, and you get rate cuts, and then maybe you go to an election. But, I mean, more likely, though, when you look at these sort of numbers, to have an election when it's supposed to be next year. The other thing I wanted to point out from these figures is this. 2 of the states do have a contractionary quarter result in state final demand. New South Wales and South Australia. New South Wales down 0.4, as is South Australia. Victoria 0.0. So where there was growth in the last quarter, and it's only a quarter, and state figures aren't as strong as the national in terms of accuracy, but the mining states, and mining's up 1% for the quarter nationally, by the way. Queensland and WA, they're up for the quarter. WA 0.8, Queensland 0.6. New South Wales economy not in very good shape at all, and that, as we know, is the financial sector and the services sector of the Australian economy. So a pretty interesting result. Jim Chalmers is going to be, I guess, unhappy with the growth from one perspective, but not from the Treasury forecast perspective, not from the perspective of this being a soft landing, Kieran.
Indeed, Laura Jays. It's a fair assumption, isn't it, that this is where, at least in the short term, the government would like things, and then they've got 12 months before the next election, that things will be starting to improve and they can put more money themselves into people's pockets too.
Yeah, indeed. And as Andrew just pointed out, this is in line with their own budget forecast, and that is on first blush, on, face value, a good thing. But let's look at where we are in the political cycle. We're ahead of the May budget. We're about halfway through a term, closer to an election, and we've got these tax cuts coming in July. Now, Anthony Albanese and Jim Chalmers have said, look, we're doing everything we can, cost of living, etc., etc. But these tax cuts, I don't think, are going to be enough. This is not all doom and gloom. This is good news for inflation. And in terms of the politics of all of this, if the RBA does start cutting interest rates in September, that is good for the Albanese government. But as a whole, you'd have to worry a little bit about extra cost of living relief, where that's going to come from, because everyone's got a budget, households have got a budget, the federal government's budget is in pretty good shape. So if they're doing everything they can about easing cost of living pressures, the tax cuts just aren't going to cut it. The other thing here is, business conditions. Labor, when it comes to industrial relations and workers and the unions, have been very Labor this term. They've got, some popular items through for their base. They're talking about right to disconnect, right to work from home, all of these kinds of things. But they, I think, are in danger of being anti-business, and it's business that employs people. It is not government. It is business that create jobs. So I think that's the danger for Labor. The unemployment rate is still at historic lows. Yes, it's got a bit of room to move, but the other danger here is, Kieran, Labor politicians standing up saying we're doing everything about cost of living, we're giving you a tax cut, all of this, but not even touching the sides for people.
Kieran, I'll say that basically this is an invitation for stimulus in the budget. That's the other way to look at this. I mean, he's got a budget coming up, chuck in some cost of living relief. This is exactly how they want it to play out. Comes down, isn't a recession. Since they've been elected in May 2022, they haven't been able to put any sort of cost of living relief or much at all, apart from a bit on energy bills in there, because they didn't want to fuel inflation. Now this, together with rate cuts, can occur over the second half of the year. So right now, people aren't happy, business isn't happy, especially, as Laura says, with their IR changes. But by the end of the year, it could be a different picture if the government plays its cards right.